All right, let's get started. Let's get started. Appreciate the likes. Thank you guys so much for the likes. Let's get started. We're gonna talk about we're gonna dedicate some time right now to talk about DSCR loans. A DSCR loan is a great program to use if you are looking to invest into real estate. Okay, so a DSCR loan, most people don't know what that is, but it's actually this is how investors are able to buy so many properties so quickly. Um, so DSCR stands for Debt Service Coverage Ratio. Okay, it's a loan for investment purposes only. So that means that you cannot use this loan as a first-time home buyer. You have to meet the definition of an investor, okay, or an inexperienced investor. To the bank, an inexperienced investor is going to be somebody who has a property, who has had a property for the last 12 months and is looking to buy their first investment property. Okay. Experienced investor is going to be somebody who owns a property for more, or I'm sorry, owns investment one investment property for at least 12 months or 24 months, I'm sorry, or if you own two different properties at least 1 year. Okay. So those are the definitions of investors. Okay. But again, if you're gonna do a DSCR loan, you at least have to be a current homeowner for the last 12 months. All right. So the beauty of a DSCR loan is that there is no income documentation involved. So no W-2s, no tax returns. Okay. That is not how you qualify for a DSCR loan. Okay. So no W-2s, no tax returns. The way you get qualified is by showing that the property that you're buying for investment purposes, that the rental income pays 100% of the mortgage. Okay? That is how a whole DSCR loan works. Okay? So let me give you guys an example. So before I go that route, the other benefit of a DSCR loan is no mortgage insurance. Okay? The other benefit of a DSCR loan is that we don't care about the debt that you have. So when we run your credit report, like if we see that you have three car payments and you owe $20,000 in credit card debt and you have personal loans and you have all these different things on your credit, that doesn't matter because we don't care about your debt either. Okay? The way you get qualified for a DSCR is with your DSCR ratios. Okay, so let me explain how that works. So before I go there, again, just want to recap, investment properties only. You must already own a property to do a DSCR loan. 20%, well, actually 15% is the minimum down payment, but those 15% options are only available for experienced investors. People who are not experienced investors will need 25% down. A DSCR loan works better whenever you are putting more money down, so that way the ratios work out better. Mm, Minimum FICO score is 620. Minimum FICO score 620. And depending on how much money you put down, you will need reserves. So the benefit of the DSCR loan as well is that, if you do a jumbo loan or you do other investment properties, they're gonna, like, if you own multiple properties, they usually ask you for reserves on all of the different properties that you own. The DSCR loan, since we don't care about your other debt, they're only going to ask for 3 to 6 months reserves on the property that you're buying, not all the other ones that you may already own. So let me give you guys an example of how a DSCR works. Can you do Ohio? If so, I got a no-brainer for you. Yeah, a DSCR loan actually can be done. I can do those loans in different states, but it has to be for like a business purpose use. I actually have a list of different states. Let me check if Ohio is part of that list. What was that email I got? Uh, I'm gonna have to find it. There's actually a list of let's see, DSCR state. I'll find out for you. Texas, yeah, I'll check Texas. Texas for sure. I know for sure I can do it. Texas, I can do. Um, so hold on. I'm gonna have to find it. Uh, yeah, DSCR is cash flow. I am licensed in Florida, so I can do Florida for sure. But anyways, let me continue. Let me continue. Let me continue. Um, mm, so 75K, where was it? 75K, 1450 a month will get 2250 and own a private primary PM company, very experienced. Okay. Yeah, that sounds really good. So here's how the DSCR ratio works. Okay. The way the DSCR ratio works is you're going to be buying an investment property, right? To rent it out because you cannot live in the property that you're buying with a DSCR loan. So let's say you're buying a property and the principal, interest, taxes, and insurance equals $2,500. So if you want a DSCR loan, you have to show proof with a lease agreement, and it also has to be supported by comparables, rental comps around the area. So you can't just say, "Oh yeah, I'm going to rent this one bedroom, one bath apartment for $3,500 a month." If there are no supporting comps, then they're not going to believe that. So it has to be within kind of, it has to be credible, basically. So the whole point of the DSCR loan is if your mortgage payment is going to be $2,500, you have to show that you can rent this property out for more than that. So that way you have a 1% ratio. Okay. So as long as you have a 1% DSCR factor, you qualify to do a DSCR loan. I have a few banks that I work with that will on a case by case basis will also take a little bit, like if you're not quite there yet, if you were renting this property out for like 2,400, like there's still a little wiggle room there that we can do. So this is how a DSCR program works. It's just on the cash flow that the property is getting, and as long as the cash flow covers the mortgage payment, then you're good to go. Okay. Now you can also refinance. So I'll give you another example. I've been talking to many of investors that buy properties on, I don't know if you guys have heard this, but most of you probably will. Hard money loans. So a hard money loan is usually taken out whenever, property's not in financing condition, or maybe it's something that you got to close quickly that you're going to flip over a short period of time. A hard money loan is something that that usually balloon payments on you. So like the whole thing comes due after a year. It's an interest only loan at a high interest rate. So a hard money loan, when people get into these loans, they either have, either they sell that property or maybe they want to decide to keep it. The problem with like self-employment and people who own companies and LLCs is that sometimes, especially if you own multiple properties, it can get really hard for you to qualify to do a refinance. That's where it can get really hard. So if you don't have the tax returns to show that you qualify to do a refinance, you can do a DSCR refinance. All we care about is that you have at least an 80% loan to value ratio when it comes to doing a refinance. So this could be a great way for you to get out of these hard money loans, especially if you don't have the income to qualify. Now, here's another thing too. You can also do a cash out refinance on a DSCR loan as well. So you could do a cash out refinance on a DSCR loan. So this is a great way to buy multiple properties without having to worry about lenders looking at your income, your W-2s, your tax returns, or any of those things. The 20% down payment. So technically, the lowest down payment you can put down on a DSCR loan is 15%. That's going to be only for those who meet the definition of an experienced investor. Okay. Now, if you don't meet the definition of an experienced investor, then you're going to need 20% or 25% for your initial down payment. Keep in mind, the bigger the down payment you put down on a property, the better it will be for you to qualify with these ratios, because the mortgage payment will be lower as a result, and that way, if it's easier to meet those ratios with the rents, if that makes sense. 6 months reserves is 15K. So 6 months reserves on this payment is, where's my calculator? What the heck? I just have my calculator. I don't know what I did with it. Oh, here it is. So 6 months reserves on this particular example, 2,500 times 6 is 15 grand. Yeah, you're right. So it depends. I mean, this is just an example, right? You don't, maybe you're buying a small one bedroom, one apartment, one bedroom, one bath apartment. Maybe you're buying a house. Maybe you're buying, it depends. It depends. Can you rent out the investment property to your own business? Yes, you certainly can. There's ways around that. We could definitely talk about it. There's definitely ways around that. A DSCR loan is very, what's the word I'm looking for? Like we're willing to work with you, basically. Mm, I have a house. I owe 380, current value 600. Okay. Okay, so here's the thing. So rate and terms. A DSCR loan is not going to have a good interest rate, right? A DSCR loan is going to have a high interest rate. You're going to have somewhere between a 7.8 all the way up to a 9.5, somewhere within that parameter, depending on what your FICO score is, depending on how much, if you want a prepayment penalty and how long of a prepayment penalty you want. It depends what type of property you have. If it's a single family, if it's a condo, if it's a townhouse. It depends on, of course, I think I already said FICO score, and down payment. So there's multiple things that come into play whenever, you get quoted an interest rate for a DSCR loan. But, investors don't really care too much about that. I mean, very rarely do I get, oh, well, the rate's too high. Well, if you're complaining about the rate being too high, then you don't understand how a DSCR program works. I mean, it is what it is. Like a DSCR loan, you're going to have a high interest rate. But that's not the, like, you're buying this property, and you have to show cash flow from the very beginning. So it doesn't really matter. Like, who cares? Who cares what the interest rate is, because you have to show cash flow, positive cash flow on the property. So the people complaining about the DSCR rates are people who don't understand a DSCR loan, honestly. It's more for like you have to be you have to be considered an equity investor. Like you understand the whole point of owning something and somebody else paying the mortgage, and you just sit back and wait over time and gain equity. Um, so yeah, that's what a DSCR loan is. There's no hey, can I get a 5%, 6% interest rate on DSCR? No. A DSCR loan will have a high interest rate. Can you show a bit of a loss? Yes, you can show a little bit of a loss. I work with multiple lenders that can go as low as a 0.75 factor. 0.75 factor, but if you're at 0.75 factor, you will definitely need a 25% down, at least a 25% down payment. So the nice thing, like somebody was talking about reserves, the nice thing about the DSCR loan is that they're only going to require reserves on the subject property. A DSCR loan is for 30 years too. So here's another scenario. What if you get the DSCR loan right now? Okay, yeah, you're going to have the high interest rate, but who cares? Because you have to show positive cash flow from the very beginning for them to even finance you. Okay, you buy this DSCR property, and let's say you own it for like 5 years. And 5 years later, you're thinking about refinancing the property. You can refinance this property for whatever you want. You can refinance it as an owner-occupied property down the line. Let's say all of a sudden you say, you know what, I want to move into that house later on. You can absolutely move into the house. You got to wait after your prepayment penalties. There's different options for prepayment penalties, but usually most people always just do a 3 year prepayment penalty, meaning that you get penalized for paying the loan before 3 years. But let's say 5 years later, you want to move into that house for whatever reason, then you could do a refinance as an owner occupied property. And then that 8%, 8.5% interest rate you had, now guess what? Like 5 years later, I don't know what the rates will be, but let's just say they're just 5%. Well, then you can just refinance that property into a 5% interest rate. So if you don't move in, you can still refinance it using a regular refinance and not a DSCR refinance. So there's going to be a lot of options. The whole point is just getting in the door and owning the property, becoming the homeowner of the property, and having somebody else pay for it. Again, the whole point of the DSCR loan is not about the rate. Is the fact that you can show positive cash flow to offset the mortgage payment. If you can show, if it breaks even, great. You've done it. You did the DSCR loan. If you're netting positive, even better, because now you're making a profit, more of a profit by buying that property. So what's the turnaround from application to funding? So with a DSCR loan, if you guys are interested in getting pre-approved, I can definitely help you. all I ask for you guys, I need to find this I need to find this state the list of states so I can show you guys what states I can do. So a DSCR loan I can do like this is for the other states that I lend for, it has to be like part of like you have to have a company basically. I'm licensed in California and Florida, so that those are not a problem. But when it comes to financing in different states, I know I can do Texas. I know I can do. Let me see. Ah, man, I'm trying to find this list of. Oh, here we go. Here we go. Okay, so here we go. Somebody said Ohio earlier. So Ohio, uh, I can do Ohio. I can do Ohio. How fast in New York, New York State, New York State, in New York State, I can do, where is New York? New York, New York, New York. How come I can't find New York? I don't see New York on the list. Um, M-I-M-N-M-O-M-S-M-T. Yeah, I'm not seeing New York. Maryland, yeah. Maryland, I can do. But for these states, it has to be like a business purpose loan, which means like you have to have a company. You have to have a company. For if you're doing it like on a person, like for you, like you don't have a company, you're just trying to buy an investment property. That would be for California and Florida. I can do those for sure. No matter if company or no company, I can do those for sure. But if you're trying to get a different state like Texas, I can do. Somebody said, let me see. Hold on. Somebody said Alabama. Alabama is not part of the list. No, no Alabama. Massachusetts. I can do Massachusetts. Um, let's see. Indiana. I can do. I can do Indiana. Missouri. I cannot do Missouri. No Missouri. Um, Louisiana. I can do Louisiana. Is Louisiana LA? I think it's LA, right? Is Louisiana? Let me see. Louisiana abbreviation. Is that LA? Yep. LA. Yep. I can do that. Um, let's see. New Jersey. New Jersey. Uh, I don't see New Jersey on the list. Oh yeah, yeah, I do see it, but I can't. You have to have license. You have to have a license there. Mm, you have to have a like a mortgage lending license to do both business and personal in New Jersey. The company has to have 3 to 6 months reserves on the property that you're buying. So only on the property that you're buying. That's the whole point of the DSCR loan. Like it's such a good product. Like a lot of people don't know about this loan, and it's crazy. Like man, this is such a great opportunity to buy investment properties. Like again, I'm gonna just retouch on the whole thing that I just said. DSCR loan stands for debt service coverage ratio. The whole point of the DSCR loan is that there's no W-2 required. There's no tax returns required. That's not the way you get qualified to buy a DSCR, a property using the DSCR loan. So it's for investment properties only. You have to meet the definition of either an experienced investor or an inexperienced investor. An inexperienced investor to the banks is somebody who owns a property already for at least 12 months that is buying a investment property with a DSCR loan. So you can't do the DSCR loan if you're a first-time home buyer. That is not allowed. You have to have owned a property at least 12 months. And if that's you, if you're an inexperienced investor, then you will require at least a 25% down. If you own other properties and you currently rent other properties, then you will be considered an experienced investor. Okay? If you're an experienced investor, that's where you can get the options to do a 15 to 20% down payment. However, the more down payment you put down on a DSCR loan, the better the ratios, the better the DSCR ratio will be, and the easier it will be for you to qualify. Okay? So, minimum FICO score 620. The higher the credit score, the better. So, for those people thinking that trying to apply for a DSCR with a 630 or a 620 credit score, yeah, you're not going to get the best rate. The rate is already bad enough. You're going to get it even worse if you have a 620 credit score. But again, I'm going to emphasize the DSCR loan is not about the interest rate. If you want to complain about the interest rate, then you don't understand about what a DSCR loan really is. They don't, most investors who use this loan, they don't care about the interest rate as much. They know they're going to be able to refinance later. And the way you get qualified for a DSCR loan is with the cash flow of the property. You have to show positive cash flow. So right from the get-go, you're showing that this property is going to pay for itself. That is how you get qualified with a DSCR loan. 3 to 6 months reserves is what you need, but 3 to 6 months reserves on the subject property. Not on all the, if you own 5 other properties, it doesn't matter. We don't care about that. It's only the 3 to 6 months reserves is only on the property that you're buying right now. Okay. So if the mortgage payments happen, if the mortgage is $2,000 a month, you do $2,000 times 6. So at the very least, you got to have $12,000 left over in your bank account to show that you have the reserves. Okay. The way the DSCR loan works is, let's just say you're buying a property, and let's just say the mortgage payment ends up being $2,500 a month. Okay, if you want to buy the property with a DSCR loan, you have to show proof, either with a lease agreement or with a 1004 with a 1004 rent survey appraisal, to show that the property will rent for more than what the mortgage payment is. So if the mortgage is $2,500, and can you get two loans simultaneously? Yes, you absolutely can. If your mortgage payment is $2,500 a month and you can rent this out for $2,800, then you have a 1.12 DSCR factor. Okay, and the way you get qualified with a DSCR loan is as long as you have more than a 1% factor. Okay, I work with different banks that can even go a little bit lower. Like if you're not quite there yet, let's say you're at a 0.90 or a 0.80, I can go as low as 0.75. Okay, however, you will, if you're going to go 0.75 to 1%, you got to have at least 25% down. 25% down. Okay, mortgage payment includes principal and interest. There is no mortgage insurance, no mortgage insurance on DSCR loans. But yeah, the 25. I mean, this is just an example. I'm not even telling you what's the price of that of the property. I'm just telling you as an example. If your mortgage is $2,500 a month, you got to show that you can rent it out for $2,800. Okay. And also you have to be realistic. You can't just say, oh yeah, I'm gonna rent this property out for like $3,500, because we have to order an appraisal. We have to order a rent survey, and they're gonna go ahead and check all the comparables in a 5 mile radius to show that there's comparable rents to whatever you're trying to rent it out for. So you can't just say, oh yeah, I'm gonna rent it out for this much. You can't. Okay. So that is how a DSCR loan works. And you can also do a DSCR refinance. So if you're having issues right now refinancing your property, due to income, let's say you're writing off a lot of things in your tax returns. I mean, I see this time and time again with, especially with LLCs, with self-employed borrowers, people who have S corps, people who have C corp, whatever, partnerships. Most people run into issues qualifying because, nobody wants to pay that much money to the IRS. I understand. So that's where it comes in. There's no, the rates on the DSCR loans are almost like 90% of the time are going to be at par, meaning that you're not paying any points. You can pay points if you wanted to, but to pay points on a DSCR loan is very expensive. It's very, very expensive. So most of the time, I don't usually charge points. And like I said, I keep mentioning this, if you're doing a DSCR loan, and if you're complaining about the rate, then you don't understand the whole point of the DSCR loan. If you're trying to get the lowest rate possible on a DSCR loan, then you just don't, unfortunately, you just don't understand what the whole point of the loan is. Okay. You can always refinance down the line. You can refinance it as an owner occupied. Let's say down the line, you say, oh, okay, well, I don't want to have that as a rental anymore. I actually want to move in there. Can I do a refinance as an owner occupied property? Sure. Okay. If you want to refinance it with your tax returns, let's say you have a few years to kind of prepare yourself to do a refinance and declare enough income, then you can just do a refinance a few years later, and then get a lower rate that way. The whole point of the DSCR loan is for you to move into that house. We don't have to check your income, okay? And to even do the DSCR loan, you have to show a positive cash flow, okay? So right from the get-go, you have to show positive cash flow. That's the whole point of investing. Who the heck is investing into a property? I mean, I'm sure there's scenarios where people buy investment properties and they have a little bit of a loss. But what's the end goal for an investment? The end goal for an investment is to have a positive cash flow on the property that you're buying in. So that's the whole point of the DSCR loan. Okay. The rate ranges are about from 7.8 to 9.5, somewhere around those ranges, depending on FICO score, depending on down payment, depending on type of property, depending on where it is. So there's a lot of things that go into it, but that's going to be your range from 7.8 to 9.5. Okay. But I was saying you can do a refinance as well. So if I've been able to help some people out that have hard money loans. So for those investors watching me right now who have hard money loans, who are currently flipping a property, right? And you really like the property and you're like, well, I wish I could keep this as a rental. I really wish I could keep this as a rental, but I'm forced to sell it because my hard money loan comes due in 4 months or my hard money loan comes due in 5 months. Okay. Well, you could do a DSCR refinance. Okay. We don't got to look at your tax returns. We don't got to look at your W-2s. All we got to show proof is that the rent or that the mortgage payment is covered by the rent. So if you have a hard money loan and you're currently flipping a property, or maybe you just got a hard money loan because you wanted to have a quick escrow or whatever the case may be, okay, you could do a DSCR loan and you can go ahead and refinance the property that way. Okay, you can also do a DSCR loan to do a cash out refinance. Okay, Mm, maybe you already own a property that you've had for many years, and you have some equity in there, and you're trying to get some money out of it to reinvest it into somewhere else. Okay, but then you already tried qualifying the regular route. You already called your loan officer and said, "Hey, I want to get some equity out," and then they look at your tax returns, and you're like, "Nope, you don't have enough income." And you're like, "Well, I really want to buy this property, but how do I get the equity out of the house?" Well, you could do it with a DSCR loan. You could do it with a DSCR loan. A DSCR loan can be with LLC, can be under your personal name. It doesn't matter. You could do whatever you want. So you could do a DSCR loan under a company name or under your name. Doesn't matter. The can you use the cash out money for reserves? That's a good question. I'm gonna have to look that one up. I want to say no, or actually, you know what? I'm not sure. I need to find out. There's a lot of guidelines that go into it, but yeah. So you could do a cash out refinance on a DSCR loan. Absolutely. What else can you do? You could do a DSCR loan for 5 to 8 unit properties. Okay. So 5 to 8 unit properties, you're most likely going to need a 25% down payment. So if you want to buy a 6 unit property in Indiana and you can show that the rents are going to cover the mortgage, you can do the DSCR loan. Okay. That's the whole beauty of this program. Okay. Not a lot of people offer it and not a lot of people know how to use it, or I mean, there's just a lot of information out there, but this is a great loan. This is a really good loan. Mm, so you can do it as a purchase, you could do it as a refinance, or you could do it as a cash out refinance as well. Um, you could do it as well if you are I-10. So if you have an individual taxpayer identification number, let's say you're not a permanent resident in the United States and you're working under an I-10, okay, you could do an I-10 DSCR loan. Okay, you can also be a foreign investor. You could be living in a different country and you could buy a property in the United States, okay, and do a DSCR loan. Okay, you could do that. So it's a foreign national DSCR loan. You could do that as well. So I've had people from Mexico contact me that have been wanting to buy investment properties in the United States. Well, there you go. We don't care about your income. Like there's no, letter from an accountant in a different state. There's no nothing like that. We do have to run a credit report. Like if you're in Mexico as an example, like I'm just choosing Mexico because Mexico is like 5 minutes away from where I live. But if you do Mexico, Mexico does have a credit repair. They have credit bureaus, so you just have to run a credit repair from there, and you could do a DSCR loan, and there you go. As long as you have money, and as long as you have, if you have a Mexican bank, and then you have to wire that money to an American institution, and then from the American institution, then you wire that money to escrow. Okay. Not a lot of lenders do 10% down. The DSCR loan works best if you put more money down. So Why is that? Because the less money you put down on a DSCR loan, the higher your monthly payment's going to be, and also the harder it will be for you to meet that 1% DSCR factor. Here's another thing you can do. Here's another thing you could do. If you're having issues with factors, we can also structure this loan as an interest-only loan. So we can do a 10-year interest-only loan and then 20 years principal and interest. So that could be another way of doing that. Speaking of, can you do foreign properties such as Mexico? I can't. I can't do that, unfortunately. I only do United States. So I can do other states, but for the others, if so, right now I'm licensed in California and Florida. So if you're anywhere in those states, I could do. If you're buying, if you're not a company and you're just trying to buy you're trying to buy your first investment property, I can help you in both California and Florida. But if you are in other states, I can help you as well for this loan. But it has to be a business purpose. Like you have to have a company, you have to have an LLC. If you have an LLC in a different state, just let me know what state you live in, and I can look it up right now. I have it pulled up right now, and I can tell you whether or not I can help you. Mm, does the interest only payment? Yeah, so after 10 years, yeah. It's a 10-year interest only. In California, LLC, I could do an LLC or personal. Texas, I could do Texas. Yeah, Texas with an LLC I could do. Um, let's see here. If you want to refi a flip property, do you still need a 20% down payment? Great loan. Let's go, Roberto. That's right, man. If you want to rent a flip property, do you still need 20% down payment? Um, well, if you're refinancing, you don't need a down payment. You need to have an 80% loan over value. I think that's what you're asking, right? This loan is not for first-time home buyers. This loan is not for first-time home buyers. Nevada, let me see, Nevada. So I can't do Nevada. I can't do Nevada. Oh wait, no, I can't. I can't do Nevada. Nevada, I can't. Texas, I can. Texas, I can do. I can do that DSCR loan in Texas as long as you have an LLC. In Georgia, I can do. I can do it in Georgia. I can do it in Georgia. But you have to have an LLC. I can own other property. I don't have a primary, but I have rentals. That's okay. That's totally okay. So you actually meet the definition perfect. Let's see here. PA, PA. Um, PA, I can help you. Is PA Pennsylvania? I think that's Pennsylvania, right? PA, PA, is that? Yeah, Pennsylvania. Yeah, I could do Pennsylvania. Illinois, I can do Illinois. Let me see. Illinois. No, I can't do Illinois. Sorry. No Illinois. No Illinois. Delaware, yes, I could do Delaware with LLC. Yeah. Arizona, no, not Arizona. No, not Arizona. South Carolina, South Carolina. Yeah, I could do South Carolina, but you have to have an LLC. You got to have an LLC. Um, Minimum DSCR 1%. 1% factor. New Mexico, New Mexico. No, can't do New Mexico. South Dakota. Let me see South Dakota. No, I can't do South Dakota. No South Dakota. So DSCR, California. In California, I'm in California, so I'm licensed here to do. It doesn't matter if you're buying it under an LLC or you're buying it under your name, for yourself. It doesn't matter. Same thing for Florida. I'm licensed in Florida and California, so I could do both of those states, no problem. No matter if you have it doesn't matter if you have an LLC or not. That doesn't matter. But for the other states, like any other state that is not California or Florida, I can only help you if you have an LLC. Only if you have an LLC. Um, get in contact with me. Either send me a DM on Instagram or send me a DM on TikTok. Um, Did you get your realtor's license and then apply? Did you get your realtor license, then apply to become a broker? Well, I'm a loan officer, by the way, guys. So I actually have both licenses. I have a real estate license and I have a loan officer, lending mortgage loan originator license. I have both licenses. Um, what's the difference between What's the difference between you, you who can do 1% DSCR and most lenders who require 1.2 rates higher? The rates are so again, I keep saying this about the DSCR loan. A DSCR loan, if you're complaining about the rate, then you don't really understand the whole point of a DSCR loan. The DSCR loan is for you to buy a property and not have to go into income calculation and look into tax returns or W-2s. You have to show a positive cash flow from the very beginning. When you're buying an investment property, that's the whole point of investing. You want to show a positive cash flow, and you want somebody else to be paying your mortgage, so that way you sit back and relax and enjoy the equity. So I don't know what the other lenders are quoting at 1.2. I don't know if the rates are higher than mine, but my rates are pretty competitive. A DSCR loan is going to be somewhere between 7.8 interest rate all the way up to a 9.5, depending on your FICO score, depending on how much money you're putting down, depending on the type of property, depending on what state you live in. There's a lot of things that go into it. I can even go as low as 0.75. So I can go 0.75, 1%. I can do those loans, but that's going to require more down payment. But then what you really want to be at is 1% or higher. This is a non-QM loan. This is a non-traditional loan. It's more similar to a conventional loan. But yeah, it's a non-QM loan, non-traditional loan. Um, Arizona. So I can't help you in Arizona because Arizona is more strict. They want you to be licensed to do a DSCR loan in that state. So I can't do Arizona. Is rent, but however, I will get licensed in Arizona because my brokerage is actually licensed there. So I just need to take the class. I don't understand how is income or W-2 is not required. Yeah, it's not required because that's not the way you qualify for this loan. This loan, you qualify on the cash flow of the property. You can't do a DSCR loan with as an owner occupied. Like you have this is for people who are buying a property for them to rent it out. So you qualify by showing that the rental income, the cash flow of the property will pay for the mortgage. That is how it works. Um, what other questions? So we anticipate cash flows of property and then apply for financing. So if you're looking to get qualified for the program, you have to reach out to a lender like myself. It doesn't have to be me. If you don't want to use me, that's totally okay. But if you wanted to work with me, we have to run your credit, okay? And then it's kind of not the same. It's kind of a weird process because it's not like your typical traditional, submit your paperwork, get pre-approval. The way the DSCR loan works is I just have to run your credit. I need to know what your credit score is to see if you even qualify. And I need to see your bank statements so I can see that you have the ability to perform on this type of loan. Because if you show me a bank account with $20,000 in it, well, I can't help you. You have to show money in your bank account so that way I know you have the 25% down that's required. Okay. And that you meet the 3 to 6 months reserve. So as long as I have a credit report, as long as I have your bank statements, I can basically give you a pre-approval and then I can help you along the way. I have different tools. I have different property estimators that I can like if you can I can give you a pre-approval letter and you can say, okay, Carlos, I want to buy this property. What do you think about it? And then we can do some numbers. I can tell you exactly how much a property can rent for, and then based on those numbers, we can actually then you have to be working with an agent too. So you find your real estate agent wherever, whatever state you're in, and then you submit your offer and then you can get your offer accepted. So let's do this. I'm going to give you guys just a quick preview of what I can offer you um, if you want to do a DSCR loan with me. So why don't any of you guys can you guys give me a property address? Can you give me a property address so I can run you the comps so I can show you what I'm talking about? Just give me a property address. I'll run the comps for you so that way you can see exactly what I'm talking about. So give me a property address for an investment and I'll tell you exactly what it could potentially rent for. Hey, Jose, how are you, man? Okay, so 510 Bird Street. 510 Bird 510 Bird Street, Veeder, Texas. What's the zip code? What's the zip code? Zip code. Zip code. Zip code. Jamie Blanc. What's the zip code for that property? Oh, okay, 510. I'm gonna have to Google it. A bird, uh, Bird Street, Vitter, Texas. Okay, 77662. All right. Okay, so you ready? Let me show you. All right, let me pull it up. Ah, dang it, I got it erased. Hold on, let me do it again. 510 Bird Street, Vitter, Texas. Okay, let me show you. Okay, so if you want to do a DSCR loan on this property, I'm going to run the comps for you. Okay, I'm going to run the comps for you, and I'm going to show you where is the PDF. Okay, you ready? Flip camera. All right. So, okay. So 510 Bird Street, Vitter, Texas. This property, it says that it's worth around it could be worth somewhere between 117 to 151 is what I usually like to say. But rental value, so at a high confidence, 87% confidence, this property, this is what kind of property is this? Single family detached, built in 1957. This could rent out somewhere between 1321 to 1494. So we have to do the DSCR numbers and see what the mortgage payment will be. And then if you can rent it out for more than if your mortgage payment or I'm sorry, if you can pay the mortgage with the rental cash flow of the property, then basically that's how it works. All right. So I get this report. I can show you the comparables. Okay. I can show you the rental comps too. Where are the rental comps? So historical similar properties. I can show you gross living area. I can show you site area. I can show you nearby properties and the average of bedrooms. I can show you bathrooms, the age. Where are the rental comps? So active listings, recent similar. Uh, there was a list here for rentals. Let's see here, active listings, historical, current rent value. Okay, so maybe this one doesn't show the rentals, but at least it gives you the report. Okay, it gives you how much you can rent this out for. All right. Jasmine, you let me look up yours. Okay, Jasmine, what did you say it was? So 2907. What's the zip code? 2907 Rio Lempa Drive. Where is that property at? Where's the property at? Where's the property at? Okay, I'll do the Calle España for now. So 1600 Calle España in Far, Texas, 78577. Okay, let me look this up. All right, hold on. It's taking a little while to load. All right. I'm gonna restart the live too, by the way, guys, and I'll start it over again. Okay, so this is for 1600 Calle España, Far, Texas. Property value 230 to 264, probably approximately. I always like to give the median, and I always like to give the high end. And then you could rent out this property for 1874. Okay, 1874. So if you work with me, like I said, I am able to do these comparables for you. Like if you do the pre-approval, do the DSCR loan, I can give you more insight about what, it's a little bit different pre-approval process because we don't qualify you on your income. But yeah, that's how it works. That's how it works. That's how it works. Oh, let's see here. I'm gonna restart the live, guys. I'm gonna restart the live. So, um, who determines the rent? So we have to do an appraisal. We have to do an appraisal survey. So let me restart this live, and then we'll get started again. And like the video, guys. If you guys appreciate this information, just like the video. Give me 1 minute. I'm gonna restart it, and I'll come back.